Here's a market update for your traders for the week ahead, focusing on Forex, the world economy, the stock market, and a specific analysis for gold. Weekly market update, navigating trade tensions and central bank moves for the week of July 7th, 2025. Good morning, traders, and welcome to your essential market outlook for the week ahead. This week promises to be a dynamic one, with global trade developments taking center stage alongside key central bank decisions and economic data releases. Global economic and political landscape. Tariffs take center stage. The overarching theme for the week is the looming July 9th deadline for the expiration of the 90-day tariff pause, often referred to as Liberation Day tariffs. President Trump's administration is threatening additional tariffs on countries aligning with BRICS nations, and the market is on high alert for any fresh updates or escalations. Trade deals in focus. While some progress has been seen with the United Kingdom and Vietnam signing trade deals and Canada receiving an extension, significant blocs like the European Union and Asia are still under pressure. A framework agreement is reportedly in place with China on rare earths and countermeasures, but no signed deal exists yet. Volatility ahead. Expect heightened volatility around Wednesday as the deadline approaches. Any last-minute deals or, conversely, a reintroduction of tariffs could significantly impact market sentiment and risk assets. Global growth concerns. The broader global economic outlook remains challenging, with projections for slower GDP growth in 2025, particularly in the United States, Canada, Mexico, and China. Inflation may also prove more persistent than previously anticipated. Forex market, dollar strength amidst uncertainty, antipodeans under pressure. The US dollar has started the week on a firmer footing, especially against commodity-linked currencies like the Australian and New Zealand dollars. This is partly due to the recent stronger-than-expected US non-farm jobs report and a modest rise in US front-end yields, as well as general safe haven flows amidst trade uncertainty. Euro to US dollar. The pair has seen a slight dip, not entirely surprising given its recent overbought technical indicators. However, the technical outlook remains broadly positive as long as higher highs are maintained. Key support levels to watch are 1.1700, 1.1630, and 1.1573. Resistance levels are around 1.18 and 1.19. The euro to US dollar will be particularly sensitive to any developments regarding US-European Union trade negotiations. Antipodean currencies. These currencies are showing weakness, driven by risk-off flows and upcoming central bank meetings where rate cuts are highly anticipated. The Reserve Bank of Australia is widely expected to deliver a 25 basis point rate cut on Tuesday, with further cuts possible later in the year. The Reserve Bank of New Zealand also has an interest rate decision scheduled for Wednesday. US dollar to Canadian dollar. The pair holds above 1.3900, supported by a firmer greenback and weaker oil prices. A sustained push toward 1.3975 is possible if oil weakness persists and US data confirms hawkish Federal Reserve sentiment. Stock market cautious optimism with underlying risks. Global equity markets are in a holding pattern, with European markets trading higher and US futures clawing back ground. US equities recently reached historic peaks, but valuations appear stretched, with the S&P 500's 12-month forward price to earnings ratio at 22.9 times, above its 5-year average. US market, the Dow Jones will be closely watching tariff developments. Despite a recent quiet period, the broader trend for the Nifty remains bullish, trading above key moving averages. However, momentum indicators are showing some signs of fading strength, suggesting a low energy zone for active traders. Asian markets. The focus will be on Australian markets ahead of the Reserve Bank of Australia decision. Chinese consumer and producer price index numbers on Wednesday will be crucial for assessing whether the economy is emerging from its deflationary spiral. Hong Kong. The Hang Seng Index has struggled with currency interventions and may test lower boundaries if global market volatility increases. Key data for stock traders. Beyond the tariff headlines, keep an eye on central bank minutes, especially the Federal Reserve's, and upcoming inflation data from China. Gold analysis, navigating volatility with a bullish bias. Gold has seen some pressure recently, dipping below 3,350 amidst profit-taking and a stronger US dollar. However, the underlying sentiment remains moderately positive, and further upside potential exists if key levels hold. Current price and context. Gold is currently trading around $3,338 per ounce, having recovered somewhat after a late June sell-off. De-escalation of certain geopolitical tensions and trade policy progress had previously trimmed safe haven demand, but dollar softness and lingering geopolitical concerns are providing support. Technical outlook. On the daily chart, gold maintains a medium-term uptrend within an ascending channel that began in late 2024. The price corrected from its May peak near 3,501. Bollinger Bands have narrowed, suggesting lower volatility and potential accumulation. Key levels: support 3,300 is a crucial short-term support. Deeper support lies around 3,120, the March consolidation zone and lower edge of the channel, and 3,057. As long as the price stays above these levels and within the channel, the bullish structure remains intact. Resistance: 3,355, 3,375, and 3,400 are immediate resistance levels. A decisive break above 3,340 to 3,350 would signal renewed upside and could lead to a test of record highs. Fundamental drivers: dollar weakness. A softer US dollar driven by fiscal risks and potential Federal Reserve rate cuts remains a key supportive factor for gold. Geopolitical risks. While some tensions have eased, underlying geopolitical uncertainty, for example, Iran's suspension of cooperation with the IAEA, can quickly reignite safe haven demand. Central bank buying and ETF inflows. Central banks continue to add gold to their reserves, and strong inflows from retail and institutional investors into ETFs are reinforcing gold's appeal. US macro data and the Fed. US inflation data and Federal Reserve speakers will be closely watched. Any commentary on future rate cuts will impact gold's trajectory. The FOMC meeting minutes due this week could provide further clarity. Trading scenarios: buy scenario. Consider long positions while the price holds above 3,300 within the rising channel. A break above 3,400 would open the path to 3,450 to 3,500 and potentially 3,520 to 3,550. Look for pullbacks toward 3,320 to 3,300 for ideal entry, confirmed by reversal signals. Sell scenario. A break and close below 3,300 would indicate weakening upward momentum. This could lead to targets of 3,240 to 3,220, then 3,120. Such a move would likely be driven by a firmer dollar, hawkish Federal Reserve comments, or unexpectedly strong US data. Aggressive shorts could also be considered after a false break of 3,400 that results in a bearish daily candle. Key events to watch this week: July 7th to 11th, 2025, Tuesday, Australia NAB business confidence for June, Reserve Bank of Australia interest rate decision. Wednesday, China consumer and producer price index for June. Reserve Bank of New Zealand interest rate decision, Bank of England meeting minutes, FOMC meeting minutes, July 9th tariff deadline. Thursday, US weekly unemployment claims. Speeches from Federal Reserve members Musalem, Waller, and Daly. Friday, United Kingdom GDP monthly estimate for May. United Kingdom trade for May. Canada employment data. In summary, this week is poised for significant market movements with trade policy dominating headlines. Traders should remain agile and pay close attention to any developments regarding tariffs, alongside central bank statements and key economic data releases. Gold, while currently consolidating, retains a bullish bias, but its path will be highly influenced by the interplay of dollar strength, geopolitical developments, and interest rate expectations. Good luck with your trading this week.